Hello, ladies and gentlemen. I hope you're fine wherever you are. I am the ACCA Tutor, Mr. Jerry Timkulu. In this video, I'm going to present to you 15 solved difficult questions for the ACCA paper financial accounting. Okay, so in that vein, this video is intended for those students who are preparing themselves for the upcoming ACCA financial accounting examination. Okay, so without much ado, let me go straight to the business of the day. Now, the objective of this presentation is to prepare ACCA financial accounting students for the ACCA FA mock examinations. Remember, when we finish studying the syllabus, we give our students opportunity to fill the real ACCA examination. Okay, but this is not, the mocks are not the real ACCA examination, but they present almost the real feeling. Okay, because you need to practice the real examination experience before you face the real examination. Okay, so the mocks are actually a replica, or let me just say a simulation of the real examination. All right, so you need to take a mock for you to sharpen your skills so that on examination day you are not going to be found wanting. Ultimately, the mock examinations are going to make you exam ready. Okay, so after the mock examination, you will then become ready to take the real ACCA examination. Now, if you are new to this channel, please don't forget to subscribe and click the notification bell just below this video. Okay, now the ACCA examination, the ACCA financial accounting examination is a 2-hour exam, and it has got two sections. Section A has got 35 objective test questions which are worth 2 marks each, and then section B has got 2 long questions which are worth 15 marks each. Now, these mock objective test questions, they are called so because they require students to input only one correct answer. Okay, so there is the combination of multiple choice questions as well as other objective questions, which are, for example, number entry. Okay, sometimes you are required to input the figure from your head. Okay, like for example, the examiner might just say, how much was the profit? So you need to calculate and input the correct profit figure in the space given. Sometimes you are required to answer multiple response questions. Okay, when you're talking of multiple response, it means that there are more than one options which are going to yield a correct answer. For example, the examiner will just say, which 2 or 3 of the following are correct? So you need to pick from the choices given 3 correct statements, or a combination of 2 elements or 2 options which are correct. So if you make a blunder in the combination, if one of the chosen options is incorrect, you are going to get a 0 for that option or for that question. So you need to make sure that the combination you are going to pick is the rightful combination. Then lastly, you might be required to complete or to answer a multiple response matching question. When you are saying multiple response matching, we are simply saying sometimes you are given a table, and then in the first column there are certain sentences, and then in the other column there are certain words. So you need to match the sentence with the words in another column. So that's multiple response matching. Okay, now can you then try to spot questions which are going to come, or to start some of the topics and leave others? The answer is no. All questions in the examination are compulsory. This means you cannot avoid any topic, but also means that you do not need to dedicate time in the exam deciding which questions to attempt. As the examiner has liberty to test 35 objective test questions in section A, it means that he is able to test most of the syllabus at each sitting. So you need to have revised right across the syllabus for this examination. Now, ladies and gentlemen, this is our first question, okay? When a trial balance was prepared, two ledger accounts were omitted. Discounts received 6,150, discounts allowed 7,500. To make the trial balance, a suspense account was opened. What was the balance on the suspense account? Ladies and gentlemen, just as a reminder or just as a revision, when you're talking of suspense accounts, these are temporary accounts which are input by the accountants in the trial balance to make sure that the trial balance balances. Okay, they're just temporary balances which are input in the trial balance. So a suspense account is going to be found on that side of the trial balance where there is a deficit. Okay, so because the purpose of the suspense account is just to ensure that the trial balance, both the debit and the credit side, balance. So we put the suspense account on that side of the trial balance where there is a shortfall. Okay, so in this case, this was our trial balance. Okay, let me just try to get a pen. Okay, where is my pen? All right, ladies and gentlemen, bear with me here. My pen is misbehaving. I do not know what's going on. Okay. Okay. Let me just try to try our balance. Okay, we've got the debit and the credit. All right, these were the columns of our trial balance. All right, so we are told that the discount received was supposed to be 6,150, and discount received is recorded in the credit column. However, it was omitted. So it means technically the debt side was overstated by 6,150. Then there was the discount allowed. Now the discount allowed is an expense, so it was supposed to have been written or to have been input in the excuse me, it is supposed to have been input in the debt column. However, it was not. The accountant omitted that, so automatically the credit side was overstated by how much? 7,500. However, like I said, if we then want to input a suspense account, it means the suspense account was the difference of the two. Okay, so looking at this, at the information you are seeing there, you can see that the credit side of the trial balance is over by 7,500 minus 6,150, so it is over by 1,350. So we input the 1,350 in the debt side because that's the side where there is a shortfall. So the accountant obviously was putting the suspense account on that side of the trial balance where there was a shortfall. So the shortfall in this case was a debit of 1,350. So the suspense account was going to be a debit of 1,350, and this gives our answer to A. Okay, so A was the answer in this question. I hope you have been answered very well. However, somebody might be wondering, why are we saying there was an over or an under when there was an omission? The question is saying when a trial balance was prepared, two ledger accounts were omitted. These accounts had been input in the ledger correctly. So in the ledger they are there. Okay, but when we are now extracting information for the purpose of trial balance, we omitted them. Initially, when these transactions were entered in the system or in the ledger, the double entries were correct. For example, with regards to discount received, the double entry was debit supplier. Because we received a discount, it means the supplier or the payable was reduced. So remember, suppliers are liabilities. So to reduce a liability with a discount, we debit the liability. So we debit the payable. Okay, so there was debit of 6,150 initially and crediting discount received. Discount received 6,150. This was done in the ledger. Okay, so when we're now extracting the trial balance, we only extracted this figure, the debit. Okay, this is why I'm saying the debit is overstated, because we only extracted the debit and ignored the credit. The credit, this one was ignored. So this is why we are saying here there was a 0 for the credit and the debit was being overstated by that one, because we had already extracted the debit supplier on the debit side. Okay, similarly on the with regards to the discount allowed, the discount allowed is given to the customer. So in this case, we had debited. Okay, we had debited discount allowed, because this is an expense. Discount allowed expense 7,500, and credited a receivable or customer receivable 7,500. This is what we had done, okay, in the initial part of the transaction. However, when we're now extracting the trial balance, we only extracted the credit side and forgot to extract the debit side. Okay, the discount allowed part of it. So this is why you see that here I say that because we did not extract the discount allowed portion of it, then the credit side was overstated. Okay, the credit side was overstated by 7,500. All right, so to then know which side of the trial balance shall we put the suspense account, I say that the suspense account is put on that side where there is the ultimate deficit, and this is the side, the debit side. You can see that the debit side was only having 6,150, while the credit side was 7,500. So the side where the suspense account should be is the debit side. So this is why we are saying debit 1,350. So the answer there was A. Thank you very much for this part. Let us now then move on to question number 2. Please hang on. Be with me as we do this revision together.
Hello, ladies and gentlemen. Welcome to question number 2 as we are continuing with our presentation. The question says, which of the following transactions are cash transactions? Statement number 1 is saying, purchase of goods for $200 payable in cash in 1 week's time. So if we are making a payment at a later date, therefore this one is not a cash transaction. Rather, it is a credit transaction. Okay? Writing a check for the purchase of a new computer. This one is actually a cash transaction. So that one is a cash transaction. Receipt of a check from a customer for goods purchased today. This one again is a cash transaction because the payment is made at the time of the transaction. Alright? Purchase of goods where payment is due in 3 weeks' time. This one again, payment is being made at a later date. So therefore this one is a credit transaction. So our answer, ladies and gentlemen, is 2 and 3, which is option B. Let's move on to the next question. Okay, question number 3. Sales tax rate is equal to 15%. Gross sales are $690. What are the net sales and the sales tax? Ladies and gentlemen, net sales are considered 100% of the selling price, okay, excluding sales tax. Okay, so the word net sales means that the sales are tax exclusive. So this is the selling price without tax. Okay, so we give them a percentage of 100%. Whilst gross sales, these are sales which are tax inclusive. So in other words, they are 100% plus the tax rate, 100% plus R, or 100% plus the sales tax rate. Okay, so the net sales, if we are given the gross sales, net sales would be 100 over the sales tax inclusive, which is over the gross sales. Okay, over the gross sales, and I said the gross sales is the 100% plus R, so 100 plus 15%, which is equal to 115, multiplied by the figure of the gross sales, which was 690. Okay, I'm sure you are seeing this, ladies and gentlemen. 690. So 100 over 115 multiplied by 690, and we must get a 600. That's the net sales figure, or the tax exclusive selling price. So in the exam, because of time pressure, you must use the technique of elimination. So you can see that our answer should be revolving around B and C, because the B has got net sales of 600 and C has got also net sales of 600. However, how then do we know which of these is the correct answer? You then have to move on to calculate the other part of the question, that is the sales tax itself. Okay, so we just use the same technique to get the sales tax. We know that the sales tax rate is 15%, so we just say 15 over 115 multiplied by 690, and obviously we must get a $90. Okay, you can just pause the video and then verify with your calculator. Okay, I'm sure you have obtained the same $90. So our answer is B. Let's move on to the next question. A company has authorized share capital of 50,000, 5% preference shares of $2 each, and 500,000 ordinary shares with a par value of 20 cents each. All of the preference shares have been issued, and 400,000 ordinary shares have been issued at a premium of 30 cents each. Interim dividends of 5 cents per ordinary share plus half the preference dividend have been paid during the current year. A final dividend of 15 cents per ordinary share is declared. The total of dividends payable for the year is how much? So this wording, dividends payable, doesn't mean that these dividends are outstanding. The question wants you to calculate all the dividends which were payable in that year or which were due to be paid in that year. So you need to calculate the total, including those ones which have already been paid, but we just want to know the total dividend expense, the dividend which was due to be paid in that year, including the ones that have already been paid. Okay, so the dividend expenditure in that year in total. Okay, so what we do is we then have to be very systematic. Okay, so we start with the preference dividend. Preference dividend. The preference dividend is based on 5%. Okay, that's the rate at which the dividend was being paid, multiplied by the value of shares. Now, the value of preference shares, we are told that they were 50,000 in total, but they were worth how much? They were worth $2. So at $2, and what do we get? Okay, we need to use our calculators, ladies and gentlemen. In the exam, there is a portion for you to use calculators. Okay, because remember, this is a computer-based exam. Everything will be given, will be right in front of your eyes on the screen, so you just have to play with the screen to identify the calculator. Okay, you can as well bring your calculator to assist you, but we recommend that you guys make use of the computer system. And if you are part of our students, we have got a dedicated lecture on Excel, okay, where you learn all these things about computers. All right, so you mustn't panic. All right, so here you get your 5,000. If you say 5% multiplied by 50,000 multiplied by $2, you get $5,000. These are in dollars. All right, and then the value of ordinary dividend. Ordinary dividend is based on the par value of the shares multiplied by the number of shares. Okay, par value of shares multiplied by the ordinary shares. Okay, so that's 20 cents. Okay, that's 20 cents or 0.2 multiplied by the number of shares, which was 400,000, and we get the value of 80,000. So we need to add 5,000. So the total div should be 5,000 plus 80,000, and we get 85,000. So our answer, ladies and gentlemen, is B. Okay, somebody might be worried and say, so what was the purpose of telling us that the owner shares had been issued at a premium of 30 cents and they're telling us about the interim dividend, this and that. Now, the examiner is going to give us a lot of figures in these questions to confuse us. Also, he wants you to understand that even if the dividend had been paid during the year, the interim dividend, part of the dividend had been paid during the year, that one is still part of the total dividend that was payable in that year. Okay, so you need to articulate information to be able to understand what is going on. Okay, the issues of share premium, this one is just these are words which are used in questions like this to just throw you overboard, but you just have to stand on your principle to understand that when we are calculating a dividend, these are the figures which are required. Okay, So always remember that the ordinary dividend is based on the par value of the share. Okay, even if the share appreciates in value, that one, we call that one a capital appreciation of the share. Okay, but when it comes to dividends, we are going to pay the dividend based on the par value of the share. Okay, so that's it, ladies and gentlemen. Let us go to the next question. Ladies and gentlemen, this is our next question, and you can pause the video and try the question on your own. Okay, a non-current asset costing 12,500 was sold at a book loss of 4,500. Depreciation had been provided using the reducing balance at 20% per annum since its purchase. Okay, which of the following correctly describes the sale proceeds and length of time for which the asset had been owned? Okay, ladies and gentlemen, we are given the information. We need to determine the sales proceeds and the length of ownership for this asset. Now, we are only given the cost information and whether the asset was sold at a loss. In this case, it was sold at a loss of 4.5, and then the depreciation rate using the reducing balance method. Do you think it is possible that we can determine the amount of proceeds, the amount at which the asset was sold, that's the sales proceeds? Can we, using the information available, can we determine the sales proceeds? Obviously, it is impossible because we do not know the net book value. This one, we do not know when the asset was sold. So it is difficult for us to determine the sales proceeds. Also, we can't tell because we do not know the NBV. Therefore, we can't tell the length of ownership or the time at which the asset was used, the period, the length of the period the asset was used by the business. So you can see that the possible answer here is A. Ladies and gentlemen, this is how you need to know to attack these questions. Okay, you mustn't panic. You just have to relax and think about what is going on. All right, let's move on to the next question. Okay, ladies and gentlemen, we are continuing with our discussion. We have question number 6 on the right side of the screen. Your organization uses the weighted average cost method of valuing inventories. During August 2020, the following inventory details were recorded. Okay, remember in the exam, we are likely to face these two methods. The weighted average, or we often call it the ACCA method. Okay, weighted average cost method, and the FIFO. Okay, however, this one is not being asked. Okay, this one is out at the moment. All right, so you have to enter into that exam hall knowing these two methods. And also remember, if you are doing management accounting, the examiner might also be interested in testing your understanding of the LIFO, okay, of the LIFO method. So in management accounting, you're likely to meet the LIFO as well. All right, so this is financial accounting. So these two methods are the ones which are going to be tested. All right, now let's move on with our discussion and see if we can make something sensible out of it. So this is the information you are given. The opening balance was 30 units which were valued at $2 each, and 5 August you purchased 50 units at $2.40, and on 10 August you issued 40 units out, and then on 18th of August you purchased 60 units at $2.50 each, and then on the 23rd of August you issued 25 units. Now the value of the balance at 31 August 2020 was, so this is the closing balance which we need to determine. Okay, so this is an inventory valuation question. So without wasting much of the time, let us do the calculations. Okay, we start with the balance brought down, or the opening balance of how much? 30 units at how much? At $2. So we are having $60 worth of inventory at the start of the period, and then on 5 August we purchased. So the purchases, how much? How many? There were 50 units at how much? At $2.40. So if we use our calculators, we must get something like 120. Okay, and then we then have to determine the average cost so far. 30 plus 50, that's 8 units. We now have 8 units in stock, which are costing a total of 60 plus 120, that is 180. So the average cost per unit should be 180 divided by 80, which gives us, so these ones are costing $2.25. So each unit is costing $2.25. That is $180 divided by 8 units in stock. Okay, then this average cost per unit is going to be used to value the cost of issues. So on the 10th of August we issued how much? We issued 40 units. These were issued, and obviously they were issued at $2.25. Okay, and the examiner sometimes might ask you to value the cost of issues. So this was the cost of issues. All right, that's the cost of issues. And 40 multiplied by 225, what do you get? Let us use our calculators and determine what we're gonna get there. Okay, 40 multiplied by that's 90. Okay, we get 90. Okay, that's the cost of the issues. 90 was gone. Okay, so we are now left with how much in stock? We are left with 40 units. Okay, and here 90. All right, and they're at the same value. Okay, these are the items which are left in inventory. Now we are then told that on the 18th of August we purchased the feather. How much? We purchased the 60 units this time. All right, at how much? These ones were costing $2.50. So they were $2.50. Okay, giving us a total of how much? What is the total? Let me use my calculator here. 150. That's the total. Okay, so let me then determine how many units do I have in inventory right now. I'm having 100 units, and what is the total? The total is 90 plus 150, that's 240. So these 100 units are costing $240. So what is the average cost of these units? What is the average cost per unit of these units? So that's obviously that's 240 over 100, that's $2.40. So on average each unit is costing $2.40. So when I now calculate the issues on the 23rd of August, the issues are going to be how many issues? Okay, 25 units were issued at the average price of 240. So 25 multiplied by 240, how much is that? That's $60. So $60 was issued. Remember, these are issues, so they should be negative. So it means we are now left, these are the closing balance. The closing balance, we are now left with 75 units. 75 units costing how much? 240 minus 60, that's 180. So you can see that the answer here is C, $180. Okay, in the exam, again, you might expect the examiner to have put two columns here on the choices, where he might say the quantities in stock. You should be able to decipher or to determine that the quantities in stock at the closing date were 75 units, and their cost was 180 units. Okay, the 180, this one, this figure. Okay, all right, so that's the technique. Sometimes the examiner would give you would force you to go such an extra mile to determine both the quantities and the price or the cost. You should be able to come up with those two figures as easily as possible. All right, let's go to the next question. Okay, ladies and gentlemen, this is a markup and margin question. Okay, and we are likely to face this type of question in our exam. All right, during the year ended 31 October 1997, your organization made a gross profit of $60,000, which represented a markup of 50%. Opening inventory was $12,000 and closing inventory was $18,000. The rate of inventory turnover was, so first of all, you need to know how do you calculate a rate of inventory turnover. Okay, let me just call it IT. Inventory turnover, IT, is equal to cost of sales divided by average inventory. Okay, cost of sales divided by average inventory. But you can as well notice that we are not given the cost of sales figure, but the information that has been given by the examiner can assist us to come to that figure. Okay, so we are given information that the gross profit was 60,000, which represented a markup of 50%. Okay, we know that gross profit is found by saying sales minus cost of sales. Okay, so gross profit GP is equal to sales minus cost of sales. All right, so we can say, we can have a table like this: sales less cost of sales. Okay, cost of sales. All right, the sales figure is there, the percentage is there, and then we get what we call the gross profit, okay, as our figure. All right, and we are told that the gross profit is 60,000, and this is representing 50%. Okay, so we know that sales, okay, sales is equal to cost of sales plus markup. Cost of sales plus markup, okay, that is cost of sales plus 50%. Okay, so which means the cost of sales should be 100%. Okay, so if gross profit is equal to 60,000, which represents 50% markup, okay, so which means the cost of sales was 100%, which means the cost of sales was 60,000 multiplied by 2, because 100 over 50% is 2. So the cost of sales should be 60,000 multiplied by 2, which should be 120. Okay, and then if the cost of sales is 120 and the markup is 60,000, therefore the sales should be 180,000. Okay, 180,000, which represent cost of sales 100% plus 50%, which is a percentage of 150%. Okay, I'm sure you are understanding where I'm coming from and where I am going. Okay, so we can easily see that the cost of sales has been determined as 120,000, and the winning formula. So let's find the average inventory. Average inventory is equal to, we are told that the opening was 12,000 and the closing was 18,000. So 12 plus 18,000 gives us 30,000 divided by 2. The average, we can say that the average is 15,000. So therefore, to calculate the inventory turnover, we say that it is the cost of average inventory in the period. The cost of sales was 120,000 divided by the average of 1,000, and we get 8 times. So this is how easier it was. The answer is D. Thank you very much. Let's go to the next question. Okay, ladies and gentlemen, this is now our next question, and it reads, your firm's cash book at 3rd April 2021 shows a balance at the bank of $2,490. Comparison with the bank statement at the third date reveals the following differences. So we are having unpresented checks, $840, bank charges not in cash book, $50, receipts not yet credited at the bank, $470, dishonored check not in the cash book, $140. The correct bank balance at 3rd April 2021 is, okay, so you are required to determine the bank balance. Now, my question to you students is, which bank balance are we talking about? Are we talking the balance as per bank statement, or we are talking about the balance as per cash book? Obviously, the question is testing about the balance per cash book. Okay, so if we are given the balance per cash book, okay, of 2,490, it means that when the examiner again asks us to have a balance per cash book, it means that he wants us to determine the corrected balance per cash book. Okay, so in that regard, we then have to know which items should be used to update the cash book and which ones should not be used. All right, so if you analyze the information provided, you can see that unpresented checks cannot be used to update the cash book. This is a reconciling item. And then bank charges not in cash book, obviously this one should be used to update the cash book. Receipts not yet credited by the bank, this one is a reconciling item. And then dishonored check not in cash book, this one should be used to update the cash book. So having known that, or having identified that, we can easily update our cash book. So we start with the balance per question as given in the question, which is 2,490 490. Then adjustment, bank charges. The bank charges, these ones were not put in the cash book, so we just have to adjust the figure. Remember, the bank charges deduct the balance. Okay, and then the dishonored checks. Okay, dishonored checks. These ones were 140. Again, these ones reduce our money. So we get the difference, and this difference is how much? Let me use my calculator here and identify what's going on. So I get 2,300. For calculators as well. So the answer is B. Okay, thank you. Let's go to the next question. Okay, ladies and gentlemen, let's start with question number 10 on the screen. Okay, a credit balance of $917 brought down on Y cost account in the books of X Co means that A, X owes Y $917, B, Y owes X $917, CX has paid Y $917, D, X is owed $917 by Y. Okay, before doing anything, you can easily eliminate B and D because these ones refer to the same thing. I'm sure we agree that these ones refer to the same thing. If you analyze the wording properly, you can actually see that the statements means one and the same thing. So therefore, they are ruled out, and the potential answers should be A and C. Now, X has paid Y 917 can easily be eliminated because if X had paid Y 917, therefore there shouldn't be a balance brought forward in any case because the payment has already been paid, has already been made, so therefore there couldn't be a balance brought forward. So these are then out, and the only answer that is there is A. Okay, but before I explain further about why A is the answer, let me highlight that what B and D mean. If Y owes X, okay, if Y owes X 917, it means that X is a receivable. So if X is a receivable, hold on. Okay, Y is a receivable. Okay, if Y owes X 970, it means that Y is a receivable of X. Now, it is X who is preparing the records or who is preparing the books, so therefore the receivables account, okay, Y should have a balance brought forward on the debit side. The balance DB of 917 should be on the debit side, not on the credit side. Okay, so you can see that B technically is wrong. Okay, and it is the same as D. Okay, X is owed $917 by Y, so therefore Y is again a receivable. So this is why I said B and D are just the same. And if they are receivable, then it means that the balance brought forward or brought down should be a debit. Okay, now let's move on to why A is the answer. Now, we have agreed that it is X who is preparing the records, and if there is a credit balance of 917 on Y's account, obviously this means that Y is a payable. So if Y is a payable, then the account Y account, if he is a payable, therefore the balance BD should be on the credit side. Okay, so this means that X owes Y $917. Okay, but if X has paid Y, then there is no need to have a balance brought down because the balance has been cleared. It's no longer outstanding. Okay, this balance brought down they simply mean that something is outstanding from past events or from past periods. All right, so I'm sure we have solved this question amicably. Let's move on to question number 11. Which of the following errors will be disclosed by drawing up a trial balance? Remember, there are errors which cannot be disclosed even if we originate a trial balance. All right, so you should be in a position to identify those errors which are not going to be detected by the trial balance and which ones are going to be detected. So this type of question, if the examiner says which of the following errors, okay, will be disclosed by drawing up a trial balance, this is what we call a multiple response question. But doesn't mean that you are going to find more than one answer. Sometimes it is a multiple response question which will allow you to select more than one, but sometimes only one is being required in a multiple response question, which means that if you select more than one, the system will allow you to submit more than one answer. However, if only one answer was the correct answer or one item was the correct, then it means that you have lost that question. Okay, so that's an example of a multiple response question. Okay, so in this case you were supposed to identify those errors which will not be which will be disclosed by drawing up a trial balance. So let's start with the compensating error. This one is an error where an error on the debit side is being cancelled by an error in the credit side. For example, we have got an electricity bill of 1,200. This is the bill for electricity expense. However, when we were entering it in the debit side, we entered it as 1,400. Then when we were now making credit entries, for example, we're recording sales, we overstated the sales by $200. You can see that the credit in the credit there is a $200 overstatement on the sales, and in the debit side we've got an overstatement here of 200 on the electricity bill. So these errors, they are compensating one another. An error on the debit is being compensated by the error in the credit side, and by the end of the day there's going to be a zero. So the trial balance cannot detect this one, so this one is not the answer or cannot disclose that error. Then we've got the error of principle. The error of principle says that we have mistakenly done our double entry. Okay, like for example, we were having an expense. We purchased a non-current asset. Okay, let's say we purchased a non-current asset for $2,000. Okay, the correct double entry should be debit non-current asset $2,000 and credit cash $2,000. Okay, that's the correct double entry. However, when we made the double entry, we said debit repairs, non-current asset repairs expense $2,000. and credits cash $2,000. So even if we were supposed to have done this, we did this one. So the trial balance is still going to balance and not going to detect anything. So an error of principle again cannot be detected. Then the single entry. In the single entry, we only, when we purchase the non-current asset, we only entered the debit side of 2,000, of debiting non-current asset 2,000, and forgot to enter the credit side. So this one is a single entry, and when we extract a trial balance, the trial balance is not going to balance, and we will discover this. So this one is going to be disclosed by drawing up a trial balance. So what about D? D says that omission of a transaction. If we did not record the purchase of this non-current asset at all from scratch, if we didn't do anything with the transaction, therefore the trial balance is still going to balance because we didn't enter the transaction anyway in our records. So in that case, this one is not going to be disclosed. So the answer there, ladies and gentlemen, was C, single entry. I hope you have been helped so far. Let's move on to the next question. Okay, ladies and gentlemen, this is our next question. Okay, at 1 September, the motor expenses account showed 4 months insurance prepaid of $80 and petrol accrued of $95. During September, the outstanding petrol bill is paid plus further bills of $245. At 3rd September, there is a further outstanding petrol bill of $120. The amount to be shown in the income statement for motor expenses for September is, okay, so here you just have to remember your template. Okay, remember when we covered the accruals and prepayments topic, we were using a template, and that template is going to assist you, ladies and gentlemen, to overcome all your obstacles in this area. All right, so the template looks like this. You just have to know one of the templates. Remember, we've got income and expenditure accruals. Okay, we've got income accrued and expenditure accrued. Okay, we've got income prepaid and income accrued as well. So you just have to know one of the templates. Just you can just have the expense template in your mind, and everything will be home and dry. We've got the income template and the expense template. So let us just, because this one is an expense question, so let us use or recap the expense template here. So expense, if you're having an expense, you just have to have a T account like this, okay, where you know that the balance BD, if there's been some prepaid expenditure, we are going to have the prepaid balance BD here, or prepayment balance BD. And if we are having an accrued expense or accrual BD, then we just have to put the accrual BD on the credit side. Okay, and if we made some cash payments related to the expense, we are going to put them on the debit side because we will be increasing the expense. Okay, whatever payment we made, we're going to put it on the debit side. Okay, then when we close the period, at the end of the period, if we are still having an accrued expense, we are going to put it as an accrual CD, right? And then if we finish the period with a prepaid expense, we are going to have a prepayment CD at the end of the period, and then we totalize our account. Okay, you get the same balance both sides. Then you are likely to get the balancing figure, which is a transfer to the profit or loss. This is the balancing figure, which is going to go to the profit or loss statement. Okay, so if it is an income question, you just have to know that the opposite of this is true. Okay, so if it is an income account, therefore the prepayment BD is going to be on the credit side, while the accrual BD is going to be on the debit side. Okay, that's for the income. So it is the opposite of this. The transfer to the income statement is going to be on the debit side if it is an income template or an income question. So let us then use this template to finish our question on the information provided on the screen. Okay, so we are going to say, all right, let me try to improvise the space available. All right, so here this one is a motor vehicle expense. So motor vehicle expense account. Okay. Now, the information tells us that we had a prepay. At 1 September, the motor expense account showed 4 months insurance prepaid. So they're having a prepayment of $80. So we just say prepayment BD of $80. But I want you to know something, or to see something here. This was for 4 months. So if the prepayment was for 4 months and it was worth $80, okay, and we are told that at the end of 3rd September, remember this was at 1 September, so at the end of September, that is at 3rd September, we are going to have 3 months outstanding, 3 months prepayment, which will be worth how much? If 4 months were worth $80, so therefore 3 months would be, that is 3/4. 3/4 multiplied by 80. You can see that we are going to have $60. So the prepayment at the end of the month will be $60. Okay, that's how we are going to maneuver with this type of question, because the examiner is not going to give you everything on this silver platter. Some of the information you need to lead yourself to identify the information. Okay, so this is how we are going to proceed, ladies and gentlemen. If it is very hard, you just have to replay this part, because that's the most confusing and most complex part of the question. Okay, so we have identified the prepayment of 80, and do we have any accrued expense BD? Yes, petrol accrued of 95. So at the start of the period, we had accrued with an accrual of $95. Okay, and I say that you put this figure on the credit side, the accrual BD. This one is an accrual BD. Okay, and then we are then told that during September the outstanding bill is paid, so which means the 95 accrual was paid, so we say cash 95, and then a further $245 was paid again, so 245 was also paid, and the payments are on the debit side. Then at the end of the period, we had outstanding petrol bill excuse me, so outstanding, the accrual CD is on this side now. Accrual CD of how much? 120 is on this side. Okay, just follow the template and you are not going to be lost. And then we have identified that there is a prepayment of how much? This is the prepayment CD of 60, the $60 there. So 60. Then you total up
your account. So the side of the account with a larger amount is going to be given preference. Okay, its figure is going to appear on both sides of the account. So we can see that the debit side has got more, it has got a larger amount. If we add 80 plus 95 plus 245 plus 120, we get 540. So this is going to appear on both sides of the account. So therefore, we are going to have the balancing figure on the credit side of the account, which is the transfer to the profit or loss. This is the balancing figure, and this is how much? This is going to be 385. That's the figure that is going to be transferred to the income statement. Okay, so the amount to be shown in the income statement for motor expenses is 385, and the answer is A. Okay, let's move on to the next question. Now, the next question, ladies and gentlemen, is testing us about our understanding of the cash book. Which of the following items will appear in the firm's cash book? Okay, so for the account, for the item to appear in the cash book, it should have led to the exchange, or it should have included the exchange of cash. Okay, the movement of cash when it was being recorded. So irrecoverable debts written off, these ones are not going to appear in our cash book, okay, because these involve the use of journal entries. Okay, they will be initially entered in the journal, okay, and then posted to the receivables ledger and general ledger. So we are not going to see them in our cash book. Receipts from the sale of surplus equipment, this one involve cash, the movement of cash, the receipt of cash. So therefore, the B is applicable. What about credit notes? Credit notes, these ones will be entered in the sales returns daybook, and no movement of cash is recorded. Sales invoices, these ones again will be entered in the sales daybook, but not in the cash book. Okay, so the only answer there was B. And let me re-emphasize this. Okay, you are going to be tested using objective test questions, and only one answer is going to be the correct answer. So be it combinations, be it, you are only going to score a mark if you come up with the right answer. There's not going to be any subjective consideration in awarding marks. So you just have to know what you must know. Alright, let's try to come to the next question. Hello, ladies and gentlemen. I hope we are still together and you are benefiting a lot from this presentation. Ladies and gentlemen, this is now question number 12, and it is saying you are given the following information. Receivables at 1 January 2023 were $10,000, and mind you, these are opening receivables. Okay, and then receivables at 31st December 2023 were $9,000, and these are closing receivables. Total receipts during 2023, including cash sales of $5,000, were $85,000. What was the value of credit sales in the year to 31 December 2023? So this question is, in short, testing
your understanding of the receivables control account. Okay, what does the receivables control account looks like? It is a T account. So receivables control account, it is a T account like this. So you just have to know which items go to the debit side and which ones go to the credit side. So receivables are assets, therefore the balance, the opening balance PD, should be on the debit side of the account. Then whatever credit sale which we make during the year should be on the debit side as well. So credit sales are also on the debit side. So the credit sales as required in the question should be on the debit side of that account. Then on the credit side, we expect those items which reduce the receivables control account figure, the receivables figure. So any payments or receipts from customers are going to reduce the receivables. So receipts from customers, okay, or any refunds or goods retained, those ones are going to reduce our receivables balance. So they are on the credit side, right? And then closing balance, the balance CD, should also be on the credit side. And then we total up our account. Okay, so that's the template for the receivables control account. Now, excuse me, for this question, we can safely say we draw up our T account, receivables control account. Okay, as usual, the opening balance, the balance BD, in this case, is $10,000. Okay, and the credit sales, this is the figure which we are looking for, so we leave the place blank, and then let's slot in other figures. These are the closing receivables, so balance CD was 9,000. All right, and we are told that the receipts from customers, receipts, these ones, the 85 is including the cash sales of 5,000, so they should be deducted. So we only have 80,000. Okay, so we total up our account, and the side with the larger amount is going to be given precedence. So 8,000 plus 9,000, that's 89,000, and this total should also appear on the debt side. Then we get the balancing figure should be our credit sales. So 89 minus 10, that's 79,000. So the answer, ladies and gentlemen, is C. Okay, we do not have time. Let's move on to the next question. Okay, question 13, ladies and gentlemen. Which of the following correctly records discount received? And by now you should be knowing how to record discount received. I say discount received is income, therefore it is a credit entry. It is a credit entry. So we say debit something and credit discount received. Okay. So what is that something? You need to know where, the context of discount received is given by suppliers to us. Okay, when we go to purchase goods, the suppliers give us some discount at some level. So it is income to us. This is why we are crediting discount received, because it is income. And if you remember your PO's acronym, we say that all incomes, liabilities, capital, they are increased by crediting. So if we receive discount received, we are increasing income, we are increasing the discount received account or balances. So we are crediting the income. So this is why we are crediting discount received and debiting the suppliers or the payables. We are reducing the payables. So we are debiting the supplier's account. So the correct entry should be credit discount received and debit supplier accounts. All right, so the answer should be 2, 3, which is A. Now, an interesting issue here is, why are we neglecting the other options? You can see from analysis that the other options are actually red herring. Okay, for example, if we are looking at option B, it is saying that you need to debit discount received and then credit supplier's account. This is a complete reversal. So it is an error of reversal. It is a reversal of this, a reversal of our rightful account. Okay, the reversal of the correct double end. So that one is wrong. Then option C is saying 2 and 4. 2 is saying credit discount received, and then 4 is saying credit supply account. This is a straight violation of the double entry system. Violation of double entry. Okay, why are we saying it's a violation? Because in double entry we must have each transaction should have a debit and a credit, not a credit and a credit, but a debit and credit. So this is why we are saying it is a violation. Similarly, D is saying debit discount received and debit supply account. This is a debit and debit. This again is a violation of the double entry bookkeeping system. So you can see that the only answer there was A. Now let us look at question 14. Question 14 is saying Matia has prepared the following reconciliation of the balance on the receivables ledger control account in her general ledger to the total of the list of balances on customers' personal accounts. Okay, so that's a reconciliation statement which has been done by Madia, where we are having the balance of general control account of $35,776, less balance omitted from list of balances, and then add sales day book under cast, then the total list of balances. Okay, what is the correct balance on receivables to be reported on the statement of financial position? The correct balance of receivables on the SFP is or should be equivalent to the balance as reported by the receivables control account. Okay, the receivables control account, or should be equal to the receivables control account balance BD. Okay, the receivables control account balance BD, or let us just say the balance CD at the end of the period. Okay, all right. So that balance should be equivalent to the figure which has been reported in our SFP. All right. So we then have to correct the figures, or we can just come up with that figure as seen. All right. Obviously, we are seeing an undercast of 900. All right, which means when we were extracting information to the general ledger, there has been an undercast in the sales day book. All right, so we need to add that undercast to the figure which we are seeing as given there. All right, so we need to correct the receivables control account figure. So we need to add 35776 plus 900. and we must get 36676 as the corrected version of the receivables balance. Okay, like I said, the information or the amounts that are to be reported on the SFP should be equivalent to the amount that is being shown by the receivables control account balances. Okay, as the balance BD. Okay, the balance BD, or the balance at the end of the period. Okay, and that is so. Okay, let me just try. We are saying the receivables control account looks like this. We've got the balance at the start of the period. Okay, all right, and then we've got our trading sales here, right, and then receipt from customer, and the balance. This is the closing balance, okay, of our receivable. All right, but now the balance BD I'm referring to is this one. This is the figure that is going to be reported on our statement of financial position. Okay, that's the figure that is going to be reported on our statement of financial position. All right, so this figure should be equal to the figure that is appearing on the statement of financial position. Remember, this information, all this information would be in the receivables control account. All right, so the accountant should just extract the exact figure as reported by the general ledger, okay, where the receivables control account is domiciled. All right, so that's the case. Now, when it comes to the extraction of information from the sales daybook to the receivables control account, we are saying that the receivables ledger control account takes the totals of the sales daybook, while it's the receivables ledger, which is a record where the customer information is presented per customer. We only extract as per entries in the sales daybook, not the grand totals of the sales in the sales daybook, but we extract information per each customer and slot it in the receivables ledger. Okay, you still remember that the receivables ledger is not part of the double entry bookkeeping system, but the receivables ledger control account is part of the double entry bookkeeping system as it is found in the general ledger. Okay, please replay that part of the video where I explain this as well. You can visit or you can become our student, and then we coach you to understand this while this time is still on your side. Until next time, ladies and gentlemen, let us meet on the last question, question number 15. All right, thank you.
Now, in this question, we're having a company called Petronella Limited. This company acquired 100% of the share capital of Stokozila Limited as on 1 July 2014 for $25,000. On 1 July 2014, the retained earnings of S was $6,000 and the fair value of the non-current assets was $6,000 more than their carrying value. At 3rd June 2020, the company's statements of financial position were as follows. We've got the SFP for P and SFP for S. P is the parent. P is Petronella Limited. Now, the question is saying, prepare consolidated statement of financial position as at 30 June 2020 for the P group. Okay, remember these ones are they should be totals. Okay, these ones are totals for each of these SFPs. Okay, that's 113,027,000. This should also be the same here, 113,027,000. Okay. Now let's do, because the question is saying prepare the statement of financial position, the consolidated statement of financial position as at 30 June 2020. Okay, and remember P purchased 100% of the share capital of Stokosi, which means that there is no NCI, there's no non-controlling interest in this case. Okay, so the first working we need to consider is goodwill. So let's determine goodwill. Okay. Now, to calculate goodwill, we then have to first consider the fair value of the consideration transferred. Transferred. How much was the consideration? If you look at the statements of financial position, you can see that this was actually the investment. So the 25,000 there was the consideration which was transferred. Okay, so that's 25,000. Okay, and then let me use a more brighter pen. Now we then have to say less the net assets. Remember, there's no NCI in this case, no non-controlling interest, so we go straight to the net assets. Less net assets. Net assets at acquisition. Okay, the net assets of the subsidiary, we are looking at the share capital. The share capital is presumed not to change. Okay, we just take the share capital there, 5,000. So you can have another column here, 5,000. Okay, and then when this subsidiary was acquired, it had its own profits, its own retained profits. Okay, the retained profits were 6,000. According to the question, the retained earnings at acquisition, or we may call them pre-acquisition profits, of 6,000. And then we are told that there is been some fair value uplift. Okay, because at the time of acquisition, the non-current assets were more than, we're having a fair value of $6,000, which was more than their carrying amount. So we call that one a fair value uplift. Fair value or adjustment. Fair value adjustment of 6,000. We add that up and we get a total of $17,000. That's the net assets, and we deduct the net assets from the consideration, and we can see that there was a goodwill of 8,000. That's the goodwill. We can as well do another working for retained earnings. Okay, working to retained earnings. Okay, the retained earnings for this company. The retained earnings, we take the parent's retained earnings according to the SFP. The retained earnings for the parent were 70,000. So we take the 100% of that, 70,000. Okay, and then we go for the subsidiary. So subsidiary, here we just need the post acquisition retained earnings. We're not going to use to take the 100% here, because when we're not going to take the full 20,000 here, because when we acquired this sub, it had its own profits. So we are going to say 20,000 minus the pre-acquisition profits, and we are going to only take 14,000. However, this 14,000 is 100% of the profits, of the post-acquisition profits, because this subsidiary is 100% owned subsidiary. So we take everything. So we add up and we get 84,000. That's the retained earnings. Now we then have to do the statement of financial position for this company. For these companies, the consolidated one. So how do we go about that? We come here and say, let us use a different pen. So the SFP, I hope this space is going to fit everything. Okay, the SFP, we start with the non-current assets. Okay, for the non-current assets, we go to the question. We're going to add, actually the SFP, we're going to add the parent's non-current assets to those of the subsidiary, and get the total. So 76,000 plus 76,000 plus the subsidiary's own 18,000 plus the fair value adjustment. Remember the fair value. Okay, and we get 100,000. Don't forget the fair value uplift. Then include the goodwill. The goodwill is calculated in working number 1. Okay, we determine the goodwill as $8,000. Don't forget that. And then you add the current assets of these two companies. Okay, the current assets from their balance sheets, we had 12,000 plus 9,000. 12,000 plus 9,000, and you get your 21,000. You add them up, you get the total of 129,000. So that's the asset side of the SFP. You then have to go to the equities and liabilities, where we have the share capital. We only take the share capital of the parent. Okay, the share capital of the parent, and in this case 40,000 only. If there was share premium, you only take for the parent, so that's 40,000. Then you add the retained earnings. Retained earnings, we did this one in working number 2, and we found that the retained earnings were 84,000. Lastly, you add the liabilities. The liabilities, we only have the current liabilities, 3,000 plus 2,000. So we have the current liabilities. Current liabilities 3,000 plus 2,000, that's 5,000, isn't it? 5,000, you total up, you must get 40,000 plus 84,000 plus 5,000, that's 129,000. So you can see that our consolidated statement of financial position is having the two totals which are balancing. Okay, so in that case we have done our consolidated statement of financial position correctly. Okay, now after we have traveled so much a long journey, what shall we do next? What must we do? We need to write the two exam focused mocks, and then after we write each mock, we need to wait for the feedback from the tutor, because whenever a student submits a mock examination, we need to mark that mock examination and give them detailed feedback about how they were faring in the mock examination. So the first mock should be done, and then we give you feedback. Okay, and then we expect some change in the second mock. If you fail the second mock, it means that you are not yet ready, and we might recommend you for further studies. Okay, where we will be actually grilling you again until you become the product we are confident of in terms of passing the ACCA examination. Remember, ACCA is a professional body and the examinations are not going to be easy. Okay, if you are considered to have passed the examination, it means that you are now a master at that level. Okay, so please, you need to do these mocks. Okay, do the mocks, get the feedback, and then sit for the real ACCA examination. So what are you waiting for? Please call me now. I'm ready to be at your service. I'm ready to work. Okay, those are my numbers. Get in touch with me anytime. It's tea time. Okay, until next time, ladies and gentlemen, may the good Lord, the mercies of Allah be upon you forever and ever. Amen.